Immad, great to have you here. Great to see you again.
Yeah, excited to join you.
So starting at the very beginning, when you founded Mercury, you've mentioned a few times in a couple interviews that you had a slightly embarrassing moment when you went to pitch Andreessen Horowitz. Tell our listeners a bit about that.
Well, going to the real embarrassing stories. Yeah, I distinctly remember it was a Tuesday, and this is my fourth company, so I developed this. It doesn't actually happen anymore, which is kind of a little sad. But back in the day, everyone had to go to Sand Hill Road, which is like this road, and it's like kind of suburb of San Francisco. But that's where all the VCs are. So, I would go there. I'd go to there's a Starbucks there. I'd go there. I'd get my latte. Show up a little early, get prepped. So that's what I did. I was pitching Andreessen Horowitz for our seed round in 2017. And I got my latte. Everything's ready. I pick up the latte and I forgot to put the lid on it properly. The lid fell off and the whole thing went all over me. Luckily, it was kind of a brownish shirt or gray shirt, so it didn't look that bad. But I mean, it was pretty obvious that half of it had a latte stain on it. But I went into the pitch meeting. This is the partners meeting, so there's 20 people in the room. But thankfully, they turned off all the lights because there's a deck on there, so the lights are down, and I just do the whole pitch with a massive coffee stain on me. But they ended up investing in me. So,
do you think they noticed?
Couldn't have been that bad. No one ever mentioned it, so I guess not.
And what would be your advice now to Immad, if you look back going into pitch Andreessen Horowitz, or to some of the founders who one day want to get that opportunity to go on Sand Hill Road and pitch to Andreessen?
I was successful in that pitch, so I guess I don't have I'm do the same thing again. But I've done startups for a long time. I did my first startup in 2006, so I've definitely failed plenty of pitches. I think the two pieces of advice I would give myself if I was to go back and look at myself pitching is, number one, I used to really treat investors as kind of like a transaction. I'm trying to get money from someone. It's that is kind of the case, right? It is a business deal, but at the same time, especially now that I've been an investor for a long time, it's actually not just a business deal. It's a, and actually maybe no business deal was a business deal when it's this big, but you're trying to establish a relationship for 10 years. There's a commitment as an investor that you'll be there for the entrepreneur. So there's just all of this kind of human side to it that I was missing for a long time. I wasn't really trying to get to know the person, and I think people can tell if you're there to actually build a relationship versus there to just be a transaction kind of thing.
Yeah.
So that's something I think I missed until, now I'm I just behave like a human, right? I'm hey, what are you doing for Christmas? I'll try to build a relationship and actually understand people and help them understand me beyond just the transaction. So that's one big thing. I think the second thing that is also kind of pretty hard, especially I'm an engineer, and So I tend to take things very literally and not want to exaggerate. I'm also from the UK, so we hate overselling. Modest, exactly. But that just really doesn't work in a early stage startup pitch, right? What you're really selling is not a valuation. What you're selling is a low probability of an extreme outcome. And and it kind of is bullshit, right? No, maybe that's a harsh way to put it, but it's very low probability and very hard to believe, but you're really selling that vision. You're selling this low probability event is it's not 0.1% probability. It's actually 2% probability that this will be a $10 billion company. And that's why you should give me a $20 million valuation. And that took me a really long time to get my head around how to think about this grand vision when day to day in an early stage startup, everything's going wrong. You don't have any engineers, you can't build anything. You have no idea whether it's going to work, right? There's a lot of doubt, but you have to kind of bottle up all this doubt and make this really grand pitch.
So investors are people, so treat them as such. It's a long-term relationship, almost like a marriage. And I guess the second advice would be, sell the dream, right? We have a bit of a joke inside a Giant, but I give a bit of a discount to whatever the American entrepreneurs tell us they're going to do in terms of numbers, and we put a bit of a premium on the Brits and the Europeans and the Nordics. So I think that rings quite true.
But it's not even just about the numbers; it's like the whole story, right? Like I think the Europeans often don't sell this like $100 billion idea. It's like, everyone knows it's like a lot of things have to go right to get there, but.
And I didn't actually know you started in the UK. How did you make it over to Silicon Valley from the UK?
I did one. So, I worked for 1 year at Bloomberg. That was my only real job I've had. And then I did one startup, which didn't really go anywhere. It was like a Yelp in London. But I just kind of got addicted to like the feeling of like doing a startup and being in the ecosystem. And even back then, this is 2006, there was a wave of entrepreneurs kind of moving from London to San Francisco. And like the stories they would tell you were very fantastical, right? Like it's like people raising money and like getting millions of users and all this stuff, which was like, much rarer in the UK, especially in 2006. Yeah, it was a tiny little ecosystem. There was like 2 VCs. So it just seemed like, I decided in a very short time period that this was just something I wanted to do for the rest of my life. And it seemed like San Francisco was the place to do it.
Awesome. And so you started Mercury in 2017, almost 8 years ago. It's now valued at 3.5 billion. What was that moment when you knew we've got product market fit?
I was very skeptical of product market fit. I didn't want to we launched, and there's often this like idea of like the valley, there's a valley of sorrow of death or something like that. I don't know. But the idea is that you launch and
trough of
lots of people
disillusionment.
use the product. Trough of disillusion. That's it. Lots of people use the product, and then the buzz kind of dies down, and then you have to think about like, well, what's the long-term distribution and what's the long-term kind of fit, and like really find product market fit after that point. So we launched, but we actually grew like every month after we launched. Like we grew like more than 40% every month for the first year. And every month I'd be like, I don't know if this product market fit. Like you should, it's like delayed excitement, and we still have to figure something out. And like we weren't doing any sales at all. This was just pure organic growth. And then so we launched in April 2019, and then COVID hit in March 2020, and I was like, this is it. I knew we didn't have product market fit. Like the whole world paused for like a month. So I was like, okay, I'm glad we didn't spend too much money, etc. And then the month after that, like literally March, like was one of the worst months we had. Oh, by far the worst month. I think it was March or April. And the month after that, like we doubled because like, that like COVID like pause was so short, but like, everything about Mercury kind of fit the moment because this was a digital banking. You could sign up online. There was this like huge movement to like, digital entrepreneurs wanting to set up businesses and do e-commerce and all this stuff. And Mercury was like right there for that movement. So at that point, I was like, wow, if we can take like a global pandemic and still grow again, like we probably have like pretty strong product market fit. And at that point, to some extent, I'd been like starving the company of resources. Like I was like not hiring in front. I was hiring behind our growth. So, we didn't have enough customer support. We weren't like building to, but at that point I was like, okay, this is really working. Let's go like actually try to invest ahead of the growth rather than like be behind and be stretched continuously.
That's the kind of trajectory everyone dreams of, right? But that is pretty rare for a startup to kind of see that consistent growth.
Yeah, seriously. I mean, this was my fourth startup. This was the first time it happened to me. I think it is rare. I think it was a combination of things that allowed it to happen. I guess I can dive into that if it's useful.
Yeah, I think useful.
So I think there's like a few things. Number one, this happens much better in like either consumer startup or like a founder, prosumer. Like, we were selling to founders. So this, it's very hard to have like this kind of instantaneous product market fit if you're doing enterprise sales or something like that. Like that would just, you have to build a go-to-market motion there, which is different. So that's number one. Number two, we had a surprisingly polished product because it took us 1.5 years to launch initially. And that's mostly because we ended up doing one partner bank integration and that didn't work out. So we had to switch that partner bank to another partner bank. So, the way Mercury works is the whole back end is based on a sponsor bank, and we ourselves are just a software that like kind of sends customers to the sponsor bank. But that means the integration is like quite deep with these partner banks. But because the first one didn't work and we had to spend another 6 months building a new one, we just had like the designer and the front end team had like a ton of time on their hand and to like rebuild the product. And we actually ended up rebuilding the whole product. So it ended up being a very polished product by the time we launched. And that was like a pretty important part to the Mercury story. It's like, hey, normally people are so used to having this like very janky experience with a banking product. Like it's gonna, it's actually like slightly better in the UK. So maybe you guys don't feel as much, but in the US, it's like a very painful product to sign up for a bank account. You have to go in person, you have to stand for 3 hours in a line, and then you find out that the wires aren't enabled. You have to go back to the bank branch to enable the wire. When we started Mercury, we signed up for like 12 banks to see the experience. So it's really painful. And conversely, Mercury was like this really delightful experience. So it really got people hooked very early on. And then the other thing is I refused to launch until we had like a pretty complete feature set. Because I was like,
which is
I've been running startups for a long time. Yeah, exactly. Like people, especially in 2017, there was a lot more like MVP, do the minimum possible thing. But I was like, if we don't have wires, there's no point in launching because that's what startups need. If we don't have multi-user support, there's no point in launching because startups have multiple co-founders and they often hire people that need to manage the bank account. We also wanted to support immigrant founders because I was like, hey, I'm an immigrant when I started my first company, but also, about 50% of startups have like at least one immigrant founder. So like, because we had this like high bar, I mean, that's partly why we ended up switching partner banks because the first one wouldn't give us all the features we needed. But because we had this high bar, by the time we launched, it was, it was a complete product. It wasn't like there was bits missing that were like stopping product market fit because I knew exactly what the feature set needed to be, and there was no point in kind of going out there without like that completeness.
Amazing. And so then you hit product market fit, you're growing healthily, you decide to go bring on some capital and really supercharge this thing. You've brought on some of the best investors in the game, A16Z, Sequoia. Do you think they've had a tangible impact on your trajectory? Is it something you would advise other founders to go optimize for?
So one funny thing about Mercury is, we are selling to the portfolio companies of these VCs. Mm-hmm. We actually did this analysis where, for our early VCs, about 60% of their portfolio uses Mercury. But for someone that's not a Mercury investor, it's like averages out to like 30, 35%. And the funny thing is, like, it's not like our VCs, like, we try to make promotional like perks and things like that for them, but it's not like they're like actively pushing it that aggressively. But there's just something about being like backed by the VC that also invests in you that just lends a lot of credibility to Mercury. Like if you're selling to startups and that's like a core segment that matters to you, I think having great VCs is like 100% useful and successful. And that's worked really well for us. Outside that, there's I do think most of the time, like you're not going to be successful or fail because of a VC, but there are like very tangible, like specific things that almost every VC has done for us, like helped hire like a VP of people, or helped us through some other time, or close a candidate. So I think VCs are like very useful and powerful when used correctly, but they're not like the reason you're going to succeed or fail.
Yeah, I always talk about it with my team is we can tilt the scales. We're not going to decide which way the scales ultimately fall, but we can help tilt them one way or the other. So you've now built a unicorn. We actually had Tom Blomfield, one of your London to San Francisco peers, back on the show a couple months ago. And he's been incredibly open about the toll that Monzo took on his mental health. He's been quoted saying, I'd remember what's happening in my life and what I'd have to do that day. And this enormous weight of anxiety would just descend on my chest and push out all the air as I realized what my life was like. It's quite dramatic, but also quite intense. What's it been like building Mercury? Has it been tough in that way, or what's been the toughest part for you?
I have this outlook that like I had that one job I had for 1 year, and I just remember being just like so unmotivated. Mm-hmm. I'd wake up in the morning, I'd do that like 45-50 minute commute on the tube, and I just like did not at all feel like I I was enjoying myself, and I was like really tired after the day ended, even though I didn't even do that much work. And then I remember this feeling of just like starting a startup, and I was like working like, I mean, I was young back then. I was working like the whole 99, whatever, 997. Yeah, I wasn't not working. That's all I was doing. But I just remember the feeling of like just going like, wow, I'm just like so excited to build something. So I just feel like what I do and like, get to build something and like set my own rules is like such a privilege that I can't imagine doing anything else. So that's like hopefully keeps my mental health like a little bit in check. There's definitely like times of like it's an extreme up and down life, right? Like sometimes you're great, sometimes you're not, like this. As I said earlier, like there's plenty of times I've like tried to fundraise and failed. And that's like one of the most disheartening things, because like, you put your soul into this fundraising process and everyone says no. And like, to some extent your ego is attached to the company that you're trying to build. And like that's probably like one of the worst feelings is to have that process, and then you have to figure out like what the hell do you do with this like startup that has employees and all this stuff. So it's definitely like an extreme lifestyle choice, but it's also like I consider it like a big privilege as well.
Agreed.
So like even through like there's moments where it's like hard, like I try to think of that and go like, okay, what else would I be doing? Like I feel like I can do something here, and so that like helps center me. I've also been married with a very supportive wife for like most of that time, and she helps give me perspective as well. It's definitely hard though. I mean, it's not like easy. I think one thing that has helped me also is like I don't see it as like all on me. Like I don't personally go like wake up in the morning and like, oh, the only way Mercury succeeds is like if I think of solutions to things and like work really hard. Like we have 1,100 people working on Mercury now, and I think it's like a shared responsibility. And obviously some people have it more than others, but I have 2 co-founders, I have a 12-person exec team. But even when there was 9 of us, which is like the kind of initial core team, I didn't think of it as like it's my job to make Mercury successful. I was like, hey, how do we make it together? And I think that helps a lot. I think sometimes, and I did this earlier in my career as well, like taking it too much on yourself.
I think that's quite unusual. I think a lot of founders, CEOs do feel the opposite, actually do feel like, at least at the beginning, that it all stops and starts with them, and they're going to have to like, ultimately be the one who drives it forward. So how did you, was that sort of a deliberate psychological trick, or that's how you've always been? This is a collaborative effort. We're all. I mean,
it happened over time. Well, I've always had co-founders, so I mean, there is like, hopefully, most people feel like they have that shared responsibility with them. But there was this like distinct time, probably in 2013, where my previous startup was like about to fail. One of those times where like not raise money, etc. Union Square Ventures stepped up and gave us $1 million. Basically, they were our Series A, VC. When like we basically presented a plan to them saying like, hey, in 6 months we'll be profitable. We need $1 million to like kind of bridge the gap. So they gave us $1 million. But it was they didn't say it, but it was pretty obvious this was like the last money we were going to get. So we had to figure it out. And we went to the team and we were like, hey, we have this much money. This is the plan for the next 6 months to become profitable. And I really thought at that point, like everyone's going to quit because I was like, okay, who's going to stick around for this like crazy plan where they won't have a job after 6 months? But really, I think maybe like 1 or 2 people quit, but like basically everyone stuck around. And we did become profitable. But it really showed me that actually like, telling people like transparently what's going on and sharing the burden is like the only way to solve big problems. Because I think the problem is like if you don't share the burden, people know that they're not being given the responsibility. So they don't feel like they need to step up because they're like, okay, Immad's got it. Like it seems like it's not a big deal. He's not. Whereas if you tell people like, hey, this is like, we're about to run out of money and like, we better freaking figure it out. And like, we all have our job to like try to figure that out. It's just like, I think that people rise to the occasion and maybe they don't take it as like, for them, it's to some extent, it's a job. They'll get another job after 6 months, I guess, if it doesn't work out. But so they won't take it as seriously as like maybe you would as the founder CEO. But they do actually like they enjoy that. Like, I think people actually like being told what's going on, and they like being given difficult problems. So after that happened, from then on, I've been like, okay, this actually worked great. Let me try to do that, like, in all my companies.
I love that story. That feels like an important leadership lesson. And yeah, I totally agree. Startups, the highest highs, the lowest lows, but ultimately a privilege to get up every day and be building something that you're excited about. Shifting attention to the other hat you wear in Silicon Valley, you have angel invested in over 350 startups. I got to ask you what your process for getting K1s is, because that's got to be a whole work stream there. But and you've been in some fantastic companies, a bunch of unicorns: Rippling, Airtable, Rappi, Substack. What have you learned from those 350 investments? What do you look for in a truly brilliant founder? How do you spot a future unicorn?
I mean, part of the reason I have so many investments is it's quite hard to spot a future unicorn.
That's one way.
If you knew for sure, you would. No, I really do think it's very hard early on to know for sure. And I think, like, I'm a believer in a diversified portfolio because it's so much of the returns are in that power law that, like, if you can get $100 billion company and you do 100 bets to do it, that will actually give you a higher return than like 10 bets most of the time. But at least for me, the biggest thing, and it kind of ties into a lesson I learned at Mercury, is I think the market matters so much. And like, I don't think I'm like that much better an entrepreneur when I built Mercury versus my previous companies. I'm definitely better, but like, I'm not like 10x better. I'm like mostly similar. But the idea for Mercury was just like so good at the right time, and obviously well executed, but the idea made a huge difference. So that's definitely something I focus on, is like, I want to, it's not that the market has to already be huge, but I want to see a path that, like, in 10 years time, this could be a huge company. And then there's a bunch of things around that. Like, to build a huge company, you need to like have like some moats and things like that as you scale. You need to be the kind of entrepreneur that wants to build a huge company. I mean, lots of people are okay with, not doing that. Like, it takes like a lot of intensity and commitment to build a big company. And you kind of, as an investor, have to have like some sort of thesis about where the world is going. And that thesis has to change all the time, because, what exists as an opportunity, either someone already does it, or, like maybe you believe something during the pandemic that you don't believe after, etc. So it does require, like, I'm like, I literally look for different things every 6 months to invest in, because I'm like, I think this is played out, and like, this is maybe more interesting. But obviously you're also opportunistic to just see what like entrepreneurs are coming up with. So that's by far my biggest focus. The second thing is it kind of goes back to like this kind of human aspect of it. Like, I feel like if I invest in an entrepreneur, I'm kind of making a commitment that, like, if they text me, I'll respond, and I'll jump on a call on like a Sunday evening or something.
Right.
So I only want to do that if I like the person, and if I feel like our values align. If they're kind of like not being transparent and open or whatever, like that I have an issue with. And so that's number two. I think there's something else that is hard to judge, especially in kind of younger entrepreneurs. But you want to see, like, is there a track record of like this person like trying to do hard things and succeeding at them? And obviously it's easier if it's a second-time entrepreneur or third-time entrepreneur. And actually, all the examples you just mentioned are all second-time entrepreneurs. Like Airtable, how he sold his previous company to Salesforce. The Rappi founder, he actually built like a 300-person consultancy before he built Rappi. Anyway, I won't go through all of them. But yeah, often second-time entrepreneurs, like, if they're willing to do it again, they're crazy enough to like make a big company. So it is, I do have a bias towards second-time entrepreneurs, but, often, obviously, like some of the biggest successes are first-time entrepreneurs as well. So you can't be like kind of too closed off to that.
Yeah, we've backed a bunch of second-time entrepreneurs at Giant, and some of them are doing phenomenally well. But I would say even for the first-time entrepreneurs, you often can spot examples of exceptionalism in their backgrounds, whether they won, loads of money on an online poker tournament when they were 15, or they came top of the national exams in Turkey, or they ran an art gallery at 24. There's always kind of these awesome, unique stories, I think, of what people have done and shown real agency and some brilliance. So why did you decide to formalize this angel investing? You had a great seat being the CEO of Mercury, writing your angel checks, but you chose to turn this into a formalized $26 million fund. What was behind that decision?
So I've actually been investing with other people's money since 2016. So I had a rolling fund on AngelList. So I had this process, but it was a lot less formal. Mostly I decided to formalize it because two things. Number one, I had a bunch of LPs kind of approach me saying they would invest. So I always thought,
why not?
In the fundraising process sounded quite complicated, but I felt like I had a few people that would be relatively quick to close. And then number two, I'd been working with Yash, who's my partner on the fund, for a year. He was actually an early investor in Mercury, and he was available and he was kind of helping me with investing. And I really liked working with him, but in order to really work with him full time, at least he's full time on the fund, I needed to have like a formal fund. And I partly thought it would save me time because I was like, oh, wow, I'll have someone working full time on it. It'll save me so much time. But, it turns out but he mostly just goes and finds more companies to talk to. And so I end up spending about the same amount of time on the fund. But I think we end up investing in better things.
Fair enough. So Giant's founded by two former founders, myself and my partner, Tommy. We personally believe that having been in the trenches, built a company from the ground up, gives you a certain empathy and an ability to spot talent over those that haven't gone through that experience. Do you agree? You're a founder / investor yourself.
Yeah, 100%.
Yeah.
I mean, it's also not all the time, but most of the time, if you're an entrepreneur and you have an issue, you're trying to hire a CFO for the first time, or you're trying to do a Series B. Yes, you can ask VCs, but they haven't really done it themselves. They have secondhand information. So yeah, I have I don't know how many, at least 10 entrepreneurs that invested in Mercury that are unicorn CEOs, unicorn founders and CEOs. But those are the people I turn to when I'm doing something new because they've done most of the new things. So I think that by far is the most valuable aspect of having kind of operators. I think that, the other thing is they're all busy, so they don't bother you, right? The one thing you don't want as an entrepreneur is to be bothered by your investors. You want to reach out to them when you need something. You don't want them to say hey, did you see this competitor that just launched? Right. And then you have to write a story about why they're not competitors. Surprisingly, I was also reading the news. So yeah, I think that's the combination, and I do think it's valuable. Obviously, from my seat at Mercury, a lot of entrepreneurs know about me and know about Mercury and want to emulate our success. So I end up seeing a lot of companies.
I'm going to ask you one more question. I'm going to ask you a tough one because I'm going to ask you to choose your favorite child from the 350. So which company are you most excited about in that angel portfolio and why?
Yeah, I do. I'm a big sci-fi reader, so it's always kind of fun to talk about some of the crazier, more sci-fi or hard tech kind of companies. So I'll pick this one because I think it's the most crazy one that's having some success. It's called Astroforge. They're building satellites that go and intercept asteroids and mine palladium from them. Which, when I heard that idea, I was like, I have no idea whether it's going to work, but it's going to be very, very fun to be part of that story. So I don't know if it's by far my favorite, but it's one of the kind of more fun ones I've invested in.
Awesome. Well, Immad, on that note, we'll end on mining future asteroids. It's fantastic to have you here. Thank you so much for sharing your wisdom, and it's great to see you again.
Yeah, thanks for having me. This was fun.